Hi there, welcome to Kneppy Invest. As someone who started recording videos about 3 years ago, what happened to me today has never happened before. I recorded a video on Zoom, and then when you do or record that video on Zoom, you have to convert it. And when I tried to convert the video, it came back with an error message saying, I forget what it said, but it still let me convert the video. So I converted the video, and then as I went through the video, just to see if there were any errors, it was fairly obvious about two-thirds of the way through that for a small period of time, it wasn't recorded right. It was fairly clunky, that sort of thing, and definitely the video itself was not usable. And that is frustrating that you spend a little bit of time, and when I say a little bit, only about 30 minutes of time recording a video and you can't use it. And the reason it's so frustrating is you have to do it again. And so that's what I'm doing right now. I'm recording my look at Bell Potter stock picks for 2023 again. Hopefully I won't spend as much time as my previous video because I've already had a good look at it. So that was actually my first real good look at it, and now we're having a second good look at these stock picks for 2023. So let's get stuck into it. I'll just move my video or my head over here, and one of the good things about Bell Potter and their stock picks is they don't just use one person. So they're used quite a few of the analysis. So I suppose this is true for most companies like Bell Potter who do analysis of companies. Their analysis are focused on one area. For instance, in the agricultural and FMCG, they have Jonathan Snape, who is an industrials analyst. In the healthcare, they have quite a few healthcare analysis, and in the energy or base metals, gold, energy, strategic minerals, they have quite a few resources analysis. So hopefully most of these resource analysis have experience and exposure to these particular sectors, and they should probably do a better job than me and most of us at picking stocks. Doesn't necessarily mean they do, but they should, because they are professionals. They get paid to analyze companies, and they should probably get paid a fair bit of money. So some of the sort of sectors they have looked at in this particular list or focused on in this list include listed investment companies, agriculture, technology, diversified financials, industrials, retail, healthcare, and then quite a few commodity-based companies, base metals and gold, energy, strategic metals, and mining services. So let's get into it. And the first group of companies are listed investment companies. And I don't know much about these companies. I don't spend a lot of time looking at LICs. And to be honest with you, I've heard a couple of these: the L1 Long Short Fund, MMF Capital Investments, and Regal Asian Investments. They do mention in one of these commentary here that Regal and Asian Investments is trading right now at a 14.7% discount to its post-tax NTA. So I would think that a lot of investors, a lot of analysis, LIC specialists would look at the NTA and use that, whether the company is trading at a discount. L1 long short is also trading at a 6.3% discount to NTA. But just because it's trading at a discount doesn't mean it's undervalued. Sometimes these LICs always trade at a discount. And that's one thing I have noticed when I have had a look at these LICs, is a lot of them trade at a discount to NTA, and they always trade at discount. So just because it is trading at discount doesn't mean the share price will rise from here on in. It could remain at depressed levels for the future. Now on to the next group of companies, which is agricultural. And not surprising, they have chosen A2 Milk and Synlait Milk again. They chose both of those companies in their financial year 22 list or calendar year 22 list. And A2 Milk was the best performing company in their list of stocks for 2022, and they've included it again. Funnily enough, now I don't know how the share price performed on the 3rd of, what's the date? 3rd of January. I totally forgot what month it was. But share price, their target for A2 Milk was $6.80. Now, at the end of 2022 or the start of 2023, the share price was $6.88. So the share price of A2 Milk had already reached the target price before trading had begun for the year, which is interesting enough. So no surprise, no shock that I have chosen those two companies. Nufarm is a really intriguing company. So they supply agricultural chemicals, also seeds and seed treatments globally. They mention here a marketing presence in over 30 countries and sales in over 100 countries. This is a truly global company, and I think there is potential for significant growth for that company in the next 5 to 10 years. And I am starting to hear more and more chatter about Nufarm. Wouldn't call Nufarm sort of one of those cult stocks just yet because the valuation is actually quite good right now, but I'm starting to hear more and more chatter. So I think maybe there is potential in the next 1 or 2 years. This could be one of those cult stocks that you hear everyone talking about. And if it does become that, you'll see much larger multiples attached to that company. So actually, three okay companies here. I'd probably be more inclined to invest in Nufarm and A2 Milk over Synlait, but that's just my personal preference. Now on to the next group of companies, which is technology companies. Now, last year, or in last year's list, they had also picked or chose Life360 and Ike GPS Group. I don't know a lot about Ike GPS Group. I know a little bit about Life360, but just the valuation around that company, and for the very fact they are still cash flow negative, probably is a reason why I lean away from Life360, also because the valuation is quite high, a very large multiple cap attached to that company. Frontier Digital Ventures is a little bit more interesting for me, particularly because the valuation has come down a fair bit with the share price coming down or pulling back. And also there is that potential the company will be becoming profitable within the next few years. So this company has a lot of emerging classified marketplace platforms. So we're talking about India, Latin America, those sort of places, and a few of those platforms are already profitable. And I think there is that potential. Once they overall become profitable, we're going to see a significant re-rating to Frontier Digital Ventures. So definitely a more interesting company among these three companies, and probably the one I would invest in at this point in time, but I am not a holder of Frontier Digital Ventures right now. On to the next few companies. Diversified Financials. I don't know much about Perpetual, although I do know they are undergoing an acquisition of Pendle. And whenever I see a massive acquisition, and I'll probably say this could be a massive acquisition, I am a little bit wary, but simply because I haven't done any research on Perpetual, haven't done any research on Pendle. I can't really analyze this acquisition and also this company. It's not the sort of company I probably would invest in. Cedar Woods is interesting. I did have a position in this company quite a few years ago. They are a property developer. In fact, a very big property development near me is Cedar Woods. That's near Upper Kedron, sort of in the Upper Kedron region of Brisbane. And they did mention in the commentary here, the share price has retreated from over $7 to $4.50, which means the P now, or the valuation now, is quite attractive. And they have a price target of $5.40 for Cedar Woods. Next group of companies are industrials. Three interesting companies here. I am a shareholder of IPD Group. Nice thematic here in regards to electrification, and IPD Group have their foot in the door there. Not overly valued, so it hasn't run up. Even though the share price has run up since they IPO just over a year ago, I don't think it is expensive at current prices. Environmental Group, as you know by the name, this is an environmental group company. They operate 5 core segments. One of those segments with a focus in resources and waste sectors, landfill diversion, bioenergy from waste, battery, minerals development. I haven't had a close look at Environmental Group, and I haven't heard much chatter. This is probably the first time I've seen someone pick this company within their list, or their any sort of list. Anyway, DGL Group is a company they included, Bell Potter included last year. We saw the share price run up during the year and went well above their price target. But in the second half of 2022, a lot of negative sentiment around this company, and the share price has pulled back a fair bit. It was under $1.50 last time I looked, and their price target is $2.25. One of the reasons, and I was a shareholder of this company, one of the reasons I got out before the share price pulled back a lot was because I didn't like the CEO, who was also the founder. And I think that is important. If you don't like the CEO, or you really like the CEO, that is a good reason to not hold the company, or maybe hold the company, because the CEO, or the quality of the CEO is probably a better way, is really important in my opinion. And sometimes you don't really understand or know what the quality of the CEO until something happens. And last year we did sort of get a better understanding of the quality of the CEO of DGL Group, and not in terms of running the business, but in terms of other stuff. I forget exactly what he said, but he was not very favourable in terms of the CEO of another company in New Zealand. And I think he was being a little bit sexist in what he said. Don't look at what the person's wearing, that sort of thing. Look at what the achievement of that person is doing. And he focused on what the person looked like or something like that. And that's not a good look. Anyway, the other three industrials include one company they did include last year's list, which is Cluey, an education technology company. For some reason, I have not been induced by any education companies, including IDP Education, which is definitely a cult stock. Have a look at that company, look at the valuation of that company as well. For I don't know why, but I'm just not interested in education companies. Can be education technology companies, companies that run education things. I don't know. Anyway, not interested in Cluey at all. AI Media was a company I did own for a very short period of time because the share price pulled back a fair bit because of a downgrade from an analyst, and that downgrade came to fruition. The share price kept on pulling back. Share price is now going sideways. It is consolidating. The sentiment in that company is starting to shift around. Share price is just above 30 cents, and their price target, or Bell Potter's price target for AI Media, is around 60 cents. It's hovering around being cash flow positive and profitable. However, they were doing a share buyback, which I did find interesting. And the third company they've included in this list is DroneShield, which was a fairly popular company in the viewers' share picks for 2023. So not only are some casual retail investors interested in DroneShield, also the experts are now interested in this company, and their price target is 30 cents. So I'll say two interesting companies here, and one company I have zero interest in, which is Kneppy. Now on to retail. Last year they had a disastrous pick, which was City Chic. They also picked Propel Funeral Partners last year. Forget the other company, could have been Accent. I do like Accent Group, AX1. Share price has pulled back a lot. The share price is starting to possibly move into an uptrend, possible shift in sentiment for that company. But I am a little bit wary about any retail companies at this point in time. Just like education companies, I have no interest in funeral companies. Propel Funeral Companies, InvoCare are the two on the ASX. I probably will never take positions in those two companies. And it's interesting, the third retail group is Best and Less. I could name maybe not 100. I could name 10 to 20 better retail companies in terms of quality than Best and Less. So I'm going to stay clear of Best and Less. It is a recent IPO, so it hasn't been on the ASX for that long, although I can remember Best and Less stores for 30, 40 years. So the store has been around. Maybe it was owned by private equity, and then that private equity spun it out. And if that did happen, that's another reason to be wary of Best and Less. Same thing happened with Dick Smith. Private equity spun Dick Smith out, and it was disastrous. So I'm always wary when private equity spin out companies. So Accent Group, okay. The other two I have no interest in at this point in time. Now onto healthcare. I am definitely a shareholder of Telix. I'm very bullish on that company. They mention in the commentary here that they expect revenue of over $300 million in 2023. And the revenue growth for Telix Pharmaceuticals is absolutely stellar. And that is one thing I do look for for companies I want to invest in for the long term. That revenue growth is very important. And Telix Pharmaceuticals has phenomenal revenue growth. And they also have a fair bit of cash as well, $117 million of cash. Share price has been volatile. And the reason it's volatile is just because of the valuation. I think the market cap is above $2 billion. So the market is well aware of Telix Pharmaceuticals right now. I don't know anything about Clarity. However, the company has popped up a couple of times in the past in list. And also there was a breakout in the share price. It does look like the share price of that company is moving into an uptrend. They are a developer of radiopharmaceuticals for the imaging and treatment of various cancers. So it's one of those companies that I hope simply because of what they do, become successful. This is spec buy and the valuation of $1. And the Mesoblast, whenever the share price of Mesoblast gets below $1, historically, that is a time to think about taking position in that company. Last time I looked, the share price of Mesoblast was below $1, and I took a position, just a trading position in that company, because Mesoblast has disappointed the shareholders over the past 3 or so years, and they also consider Mesoblast to be a speculation buy with a valuation of $1.65. Mentioned here is they have plenty of cash, $85.5 million of cash, but they do burn through a lot of money. So they do generate a little bit of revenue, but not a lot of revenue at this point in time. Staying on healthcare, another company that I own is Aroa Biosurgery, and I think this company will be profitable soon, and also it will have pretty good growth over the next 3 to 4 years. That's one of the reasons I bought it. The other reason I bought it was the share price has moved into, showing signs of moving into an uptrend as well. I do like Cogstate, but I have never been a shareholder of that company, even though I have followed the fortunes of that company for over 10 years. So if I just bought Cogstate 10 years ago, I would have done a really good job because the share price has moved up over that 10-year period, price target of $2.05. And say, just all you have to do is look at the commentary if you don't know what these companies do. So this is a neuroscience technology company that provides computerized cognitive testing and consulting services for trials and assessment tools for cognitive impairment. That's the most important bit. Consulting services, particularly with Alzheimer's disease. They have quite a few contracts with major pharmaceutical companies dealing with Alzheimer's disease. So again, hopefully this is a company that can succeed, because the better they do, more than likely the companies researching Alzheimer's disease are doing a good job with that. And the last company is PolyNovo, who are in the treatment of complex wounds and severe burns. They recently did a capital raising and have a price target of $2.30. There are quite few companies on the ASX dealing with wound care, just like PolyNovo. Also, Aroa Biosurgery does the same sort of thing, a growing sort of industry right now, probably not only on the ASX, but also worldwide in regards to wound care, because there hasn't been much advancement in wound care over the past 30 or 40 years. I read that something like a year ago, which did surprise me. Anyway, remaining with healthcare, one company I know nothing about, Immutep, develops LAG3 assets for the treatment of various solid cancers for use with immune checkpoint inhibitors. So this could be one of those binary stocks that if they do well, then the share price will absolutely go bonkers, but they might not do well, and then the share price will fall off a cliff. A speculative buy, valuation of 60 cents, net cash of 74 million. So plenty of cash to go through their trials and all those sort of thing. So recently published data from its phase 2 trials. So still a lot of a long road to go before Immutep even it has a revenue or any profit or anything like that. So definitely a speculative company. Monash IVF deals with fertility services. I think the time to buy this company was a few years ago when the share price, which had been in a downtrend, moved back into an uptrend. And it does look like, based off the commentary here, that earnings will be growing for financial year 23. However, they do mention here NPAT to grow by greater than 10% with earnings skewed to the second half as a result of the timing of doctor and business acquisitions. I'm always wary when I hear earnings should be skewed to the second half of the year, particularly when companies' management make assumptions. So this is not companies' management. This could be just the healthcare analysis, Tara Speranza, who made this assumption. But I'm always wary when I see earnings skewed to the second half of a year. Now, I think that's it for healthcare. Now onto base metals and gold. Chalice Mining, De Grey Mining, and Nickel Industries. I know very little about these companies. I've never been a shareholder. So Chalice Mining, I'm pretty sure this is the company whose share price had a massive run up in 2020, 2021. Bell Potter picked it again for 2022, and then share price has pulled back, but they've stuck to the guns and chosen it again in 2023. They have a mine or prospective mine 70 kilometers north of WA to establish a new strategic PGE and base metal supply in a top mining jurisdiction. Degrading Mining is a gold project, or they have a gold project in Port Hedland or near Port Hedland in Western Australia. So don't know where they are in relation to that project, how far they've got left before that gets into production. They do mention here that Bell Potter view the MGP, which is their project, Melina Gold Project, as a rare opportunity that is attractive as both a foundation production asset for DEG or as a meaningful acquisition for any of the world's top production companies. So they're talking about possible acquisition. I'm also wary of that. Don't buy companies just because you think it could be an acquisition down the road. And Nickel Industries, I was going to say iron, but Nickel Pig Iron, NPI. I haven't had a close look at Nickel Industries, even though nickel prices climbed a fair bit over the past year. So all these first two, Charles Mining and Degray Mining, are speculative buys, and Nickel Industries price target of $1.71. Now, sticking with the commodity area, energy. Last year they picked Boss Energy. They're sticking to the story. Boss Energy again. I almost would call Boss Energy one of these coal companies. I hear it a lot. If you want to buy a uranium company, buy Boss Energy. This is the best uranium company yet. It isn't in production yet, although they mention here preparing to restart production by the end of calendar year 23. So within the next 12 months, they hope to restart production. So this company still hasn't got any revenue coming in, still hasn't got any cash flow because they are not in production just yet. So a definite speculative buy, and Bell Potter has a valuation of $3.51. I know nothing about Strike Energy. So this company has assets in WA, and that's it. Nothing else. So speculative buy of 45 cents. So this is one of those companies I know nothing about. And to be fair with you, I don't really want to do any research on Strike Energy at this point in time. Now onto strategic metals. So you're going to be thinking about lithium, rare earths, those sort of companies, graphite. So Liontown Resources they have a lithium project in WA. So it's not surprising to see a lithium company here with a valuation of $2.87, a speculative buy. Another speculative buy for Red Dirt, another lithium company with projects or two projects in WA. So you probably have to do a lot of research on both these companies. Probably one of the questions I have is when would these companies hope to get into production? Because I am bullish on lithium in the short to medium term, but in the long term, probably less bullish, just because of the potential supply we're going to see coming online over the next 5 years. And Latin Resources, not exactly sure what they do. So we expect a material value accretion as LRS adds to the Salinas MRE and ultimately defines its path to development. So not exactly sure what they do. So I'm going to have to do a little bit more research on Latin Resources, but another speculative buy with valuation of 22 cents. And more strategic metals, green technology metals, which is lithium. Again, hard rock lithium assets in Ontario, Canada. I have heard quite a few companies, lithium companies, sort of are located in Ontario, Canada, also Quebec as well. So it's interesting, and it seems they've mentioned here that Ontario, Canada, on doorstep of North America's fast evolving EV sectors. So maybe that sort of area of Canada is in that sort of area where there's a lot of lithium mines or potential lithium mines. I don't know. I haven't done any research on that area. Speculative company again with valuation of $1.54. Arafura Resources has been popping up a lot recently. This is a rare earth company. They mention here Advanced Rare Earth. ARU will look to reach a final investment decision by the end of calendar year 22, where we are there. So let's hope they've made a decision with first production expected around the end of calendar year 24. So 2 years to go here. I'm pretty sure the valuation of this company is almost $1 billion. They have made an offtake agreement with Hyundai for up to 30% of production over 7 years beginning in 2025. And rare earths is really important. It is the very definition of a strategic minerals because most of the production comes out of China, apart from Linus, and the governments, particularly the American governments, want more rare earths coming outside of China. And Dreadnought Resources, I don't know anything about this company, again, is also a rare earth explorer. and I don't want to do any more research on this company at this point in time. I'm not that interested in explorers. I'm a little bit more interested in those companies getting close to production, or those companies that are already in production, and particularly those companies whose underlying commodity has been suppressed for a while and looks like it's turning up. That's the time to take positions in commodity companies. That's just my opinion. Anyway, and for Dreadnought Resources, they have a valuation, a spec buy of 20 cents. And another strategic metal, Alpha HPA, ticker code A4N, high purity aluminum, if you come from America, and high purity alumina. I was a shareholder of a company just like this. I think it was called Altec, ATC or something like ATS. I forget what it was. I bought into that company 5 years ago because of that promise, and they have yet to get into production. So, and those high purity alumina and stuff like that are very important. So a lot of applications as well. They mentioned here lithium-ion batteries, micro LED, and semiconductor manufacturing. All they have to do is show me they're very close to getting to production, and show me that they're going to be highly cash flow positive. They have a spec buy here for this company of $1.02. And finally, mining services. I'm pretty sure on last year's list they did not have any mining services, but mining services and these companies in this sector are becoming more favorable. So the tide is turning. The low point in the cycle for these companies was 2016-17, and many of these mining services companies did not make it out of that downturn, but the tide is turning, and it's turning favorable. And that's why a lot of these companies' share price and charts are looking interesting. So the three companies they have chosen are Matter Group, MAD, DDH1. I'm going to do a video on this company soon. It is looking interesting, and Index. And I probably will look at a lot of companies in this space. But again, most of the companies in mining services I would call low quality companies. And for low quality companies, you don't buy the company and hold it forever. You trade the cycle. And right now, I think there is potential of a lot of these companies moving into an upgrade cycle. We've already seen some of these mining service companies release profit upgrades. I'm thinking of Parenti recently. So now might be the time about thinking, transitioning towards mining services companies. And I think that's it. Very important here is to go through disclosures. And funnily enough, a lot of companies that have included in this list, they were the joint manager of the company's IPO. For instance, IPD, they were the lead manager for that IPO. There's probably a few others here. They were the lead manager, and Bell Potter were the lead managers in a lot of capital raisings. For instance, Bell Potter acted as the lead manager in IMM's a $60 million raise in June 2021. Lead manager in the placement of $100 million in May 2022 for Chalice Mining and received fees for that services. Joint lead manager and underwriter for the $225 million equity raising for nickel, or NIC. What was that called? Nickel Industries or whatever it was. Joint lead manager for Strike Energy in their $30 million placement. Lead manager for Liontown. Lead manager for ADT. Which one was that? I forget. And joint lead manager for GT1, $24 million IPO in November 2021. So a lot of interest here. I won't call it bias, because just because they've included these companies in that list doesn't mean they were biased because they were the lead manager in the IPO or the capital raising. But you could argue that they know a little bit more about these companies, and they might be a little bit more bullish than they probably should be. So I'm glad they included all these disclosures in the end bit of this article. And that's really all I have for looking at Bell Potter's. Let's go back up to the start. So that's all I have for looking at Bell Potter stock picks for 2023. An interesting group of companies. A lot of speculative companies. That's probably the only problem with it, particularly in that commodity space. I probably would prefer a few bigger companies. However, in saying that, this is just for 2023. And maybe, and you probably could argue this, successfully argue this, that it's probably better to pick speculative stocks for only 1 year period, and you pick those bigger companies for a multi-year period, because some of these companies could go through a significant re-rating of the share price if they do go through a positive news cycle. or news flow comes out of that company. So probably that's the way they're playing it, and that's why they've chosen quite a few speculative stocks. Is they hoping there's going to be a lot of positive catalysts for those companies moving forward. So if you do have any questions about some of these picks for Bell Potter, maybe get in contact with Bell Potter and ask them directly. Otherwise, I'm not a financial advisor, and if you do need financial advice, make sure you stick to someone who is qualified, like Bell Potter, and can, inform you of what to do. I can't do that because I am not a professional. I am not. I don't have any training, that sort of thing. So anyway, that's it for this video. Have a good day. Bye.